Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ed Coughlin. He's the Director of Trading Services at Nasdaq, and we are going to look at what circuit breakers are. Ed, thank you for joining me. I can imagine you've been very busy over the past couple of weeks with the market volatility.
It's been a busy couple of weeks, but we're fortunate the markets have operated, or at least the plumbing of the markets has operated really well in spite of the volatility that
Right,
we've
and
had.
that's a question that we've been getting. What are circuit breakers, for example? What are limit up, limit down circuit breakers?
So circuit breakers were put in place, and I think we all know that markets work best when there's continuous market trading, but there's times when there's an influx of buy orders or sell orders, and it's a sudden need for liquidity. And the circuit breakers allow us to take a pause. And they're guardrails, in essence, that sit around the market that protect from these sudden, downward pressure or upward pressure in the market.
Right, and so what are those thresholds that we should be looking at?
So what it is, the guardrail takes a look at where the stock is trading, and then depending upon the liquidity in that stock, we call them Tier 1 or Tier 2 stocks, being a Tier 1 stock is the most liquid stocks, and the Tier 2 stocks are a little less liquid. And there's a band that covers the market, and they oscillate around the market between 5 and 10%. So the stock is not allowed to move more than 5 or 10% away in sudden movements.
So would you define this process as orderly? Did everything go right last week?
By way of example, if we take a look at August 2015, when we had a kind of a market disruption or a sudden demand for liquidity, there were 1,300 limit up, limit down halts. A week ago Monday, there were 8. So I would consider the markets were trading very orderly. The process is designed well and working well.
All right, and to wrap up, should investors be concerned when these halts are triggered?
I think what happens when the halts are triggered, it's a safety mechanism in the market. It's designed to protect investors. I call it letting cooler heads prevail, so that allowing liquidity to settle in hopefully will attract buyers to come in, and we'll have better outcomes for our auction. And certainly evidence is being shown that that's happening in the market. So investors should be glad that these are in place.
All right, well, thank you very much for joining us today. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.